This is a debrief of task 1 for sample assessment 1 of applied management accounting. So this task is about budgetary processes, responsibilities and uncertainties. In part A of the task, it asks you to identify who would be involved in each of the following tasks. So for the first task, we have overseeing the budget preparation, and then we have assisting in the budget preparation, and we have a choice of 4 from our drop-down menu. So this includes the budget committee, the budget accountant, senior manager, and budget accountant and senior manager. So let's understand the differences between these different 4. So at the very top of our organisation, we will have our board of directors, and it's likely that the budget committee will be a committee of the main board, and it will be involving board members who are going to focus on this particular area of the budget. And then below the board, we'll have our various senior managers, and below them some managers, and then below those the various employees in the business. So in terms of overseeing the budget preparation, we'll typically use the budget committee, again the subcommittee of the board, to make sure that everything is working properly and the budget is being prepared in accordance with the policies of the business. Whereas for assisting in the budget preparation, well, we could have lots of different people involved in that process. We'll need to have the budget accountant who is helping us with that, because they'll be preparing the numbers for the budget. But we'll also need the senior managers who understand the various aspects of the business. The accountants may understand the accounting, but the senior managers will actually understand the business, and it will be a team effort from both of them to make sure that our budget is realistic. Then in the next part of the task, we need to identify the individual or group that you'll need to contact for information about each of the following tasks. So the first one is drafting the direct materials budget. So for our direct materials budget, we'll need to know how many items we'll need to use to be able to produce our product, but we'll also need to know how much each of those items will cost. So we're considering both the quantity and the price for each of our materials. So for the quantity, we'll need to talk to the production manager to help us understand that. And then for the price, we'll need to talk to our purchases manager. So it's going to be a team effort here to talk to these 2 different people to be able to prepare the budget for the business. And then if we want to agree the planning assumptions, so yeah, we will be talking to the production manager and purchases manager and find out what their assumptions are going to be. You know, how much do they think it's going to cost us to buy something in the future? But we'll want overall approval of that, and that's going to be at a higher level. So we'll be using the budget committee, this subcommittee of the board, to be able to agree those assumptions. In part C of the question, it's asking us to identify the most appropriate treatment for each of the following costs. So we have a selection of different techniques in terms of how are we going to include the various costs in the cost of our business. So remember that in our production facility, we're making some sort of product, and included in that product will be some materials, but also we're going to spend some time working on those. So we'll have our various people working on the product, so they're going to put in their labor time. But there's also going to be some overheads involved in that as well. So for example, there may be a factory supervisor watching what's going on in the factory, and what we need to do is divide that supervisor into various parts and include a part of the supervisor's cost in the cost of making that product. So all of these costs that are directly linked will be our direct costs. And then we'll also have the indirect costs relating to those overheads. because for a person working directly on that product, they're picking up the product, we can include some of their direct labour costs. But for the supervisor overseeing the whole factory, there's no direct contact there, so we can share their cost, and that's going to be an indirect cost. But also we need to recognise that outside of the factory, there are other things going on as well. So we also have administration, and we have marketing and selling. So these costs have nothing to do with the production process, and therefore they will be shown separately as a non-production overhead. So for the first of our costs, we have our office stationery. Well, that has nothing to do with production, does it? And therefore we're going to allocate that to our administrative overheads. And then we have our production labour, but specifically our sick pay in this case. So when people are sick, it means they're not going to be physically handling our products anymore. So that's not going to be a direct cost, but it is a production cost. And therefore, we need to be able to include that in the cost of production as part of the overheads. Now, we've got two possible answers here. One of them is to allocate to the production overheads, and then one of them, a little bit more specific, charge to production based on a low labour overhead rate. Well, given that this is relating to labour, then it means that the last answer is the more relevant. Potentially, it could be the second answer as well, allocate to production overheads, because it is. But the fourth answer is a better choice, so we need to choose that one. Next then we have our basic pay for our production labour. So this is where the people are working on the product and handling it, so it makes sense that we would charge that to the product directly. And then we have our stores department. Well, our stores are part of production because we're going to be taking our materials from the stores and using them in our production process. So in this case, we can include that in our production overheads. Again, it's not clear exactly how we're going to allocate that cost between the products, but we know that it is a production related cost and therefore needs to be allocated in some way. And then for the final part of the question, it's asking us to complete this following statement. So detailed budgets prepared by production managers are referred to as, so you've got a choice between top-down, zero-based, bottom-up, and incremental. So let's remind ourselves what each of these means. So for a top-down budget, this is where the board of directors or the budget committee will impose a budget down on the employees below them. A zero-based budget that's where we will start with a clean piece of paper and prepare our budget without using any prior assumptions or previous budgets. A bottom-up budget is where we have people at the lower levels of the business who are actually running their departments, and they create the budget, which they then send up to the board for approval. And then an incremental budget is where we're going to make incremental changes to a past budget. So in this case, where we have our detailed budgets prepared by our production managers, that's going to be a bottom-up. Yes, it's the people who are actually working in production, preparing the budget and passing it up to the board for approval. So because it's being prepared by the people who are actually working in the department, it's more likely that this is going to be quite a motivating type of budget, because the people who prepare it, they've got the best knowledge about what needs to be done, and therefore they're going to be quite motivated to complete their own budget. And what's going to be the effect? So it's going to be motivating on the budget holder, because they're the ones who have prepared the budget themselves and are responsible for meeting it. And finally, they are brought together to form the master budget. So the master budget is the combination of all the different department budgets from around the business.